Welcome to I Finance Mortgage. I am your host, Tiffanie Phillips, and today I have two master real estate investors, Alex Chan and Neil Vakharia. So they have both been in real estate investing, just killing the game for a while. How are you guys doing?
Wonderful. Thank you for having us.
Awesome.
Doing good.
Yes, I'm so glad you guys can join me. I have met both of them at their meetup in Newport. It's been going on for probably almost a year now, right?
Yep.
Okay, it is an awesome event. I've probably attended almost all of them for the most part. But definitely a great place to go if you are looking for knowledge. They have it about once a month, right?
Right.
Yep.
And then for Alex over here, he is a partner to Alstro Venture real estate investing firm, and also a new partner, right, in the Human Wellness Center. And Neil, you are in investing, and you do have your 9 to 5 at
Salesforce.
Salesforce.
Yep.
Okay, awesome. So thank you guys both so much for joining me. Today we're going to go over just basically how you guys got started. You both have so much going on, but also I can't wait to hear about all the projects they are on, passive, active, ADU, development building, the list goes on and on. So why don't you guys just get started? And how did you get into it? And what are you currently working on?
Yeah, Alex, go for it.
Yeah. So
Kick it off.
I also work a 9 to 5, but my focus is to build generation wealth, and my why is really where I started with my daughter. She's 9, turning 10 in next week. So just as I worked 20 years into my corporate job, I wanted to just refocus and be able to buy back time. So that's kind of kicked off my journey into real estate, where it's something that's real. I could touch it. It's not going to move away, and it's going to build me generation wealth. And as I started that path, I met with great people like Neil here and many others through the meetup. Got my mindset into more of entrepreneurship. And that's how I got connected with one of my buddies who I've known for 15 years to start the Human Wellness Center. And that's been the entrepreneurial side that I get to be creative, and I have my stability on the real estate, and that's kind of keep me motivated, for my journey into financial freedom. So it's been quite exciting to build a business both on the real estate side and with a Human Wellness Center.
That's awesome. I know that it definitely, it's amazing how much that even in the last year since I met you.
Yeah.
Like just always adding up. And what are you currently working on right now?
Yeah, right now we're focusing on underwriting in Cincinnati, Ohio, and also Fayetteville, Arkansas. Both of those markets are very different. One is a little older and focused on cash flow in Cincinnati, and then with Fayetteville, that's just been high growth. Is where the numbers starts to represent the early Austin, Texas stage. So we're super excited. It's a little hard to entry into the market, but I have a partner that recently moved there so that he could be help us enter the market and be the boots on the ground. So
That's
it's been
awesome.
super exciting.
So that one is active. So it's probably going to be a little easier to have someone.
Absolutely.
Yeah.
And it's multifamily, so we're looking at 10 to 30 units in both of those markets. So definitely need somebody to be boots on the ground so that they could facilitate with asset management. All of the virtual things is where I come and help with property management, of the financial side of things, and operations, which is my background for the past 20 years.
Yeah. Wow. And Neil, how did you get started or get into investing?
Yeah. So I am kind of new to the game. I'm 25. I love, I've been a real estate agent since I've been 18.
Wow.
My parents have been in real estate my whole life, so I've kind of grown up around it. I've seen kind of what the potential is, right? We've invested in California for the past 20 years or so. Since the 90s, they've owned real estate. So I've seen just a progression of how that could really build wealth. And the way I look at it is the business model, it can't be beat, right? There's more people born 5 years ago now versus 5 years ago, and there's always going to be a supply and demand issue in real estate. So I see the U.S. moving towards a renter's economy instead of a landlord economy. And I truly believe that, what side of the coin do you want to be on at the end of all of this? So I'm actually looking for cash flowing properties in specific markets right now,
Yep.
and really just trying to understand, hey, I need to get my foot in the game sooner rather than later, because you never know what's going to happen. If interest rates are this high now and where things go, it could be, property values are going to shoot up, in my opinion. So
Yeah. Just
Yeah.
get that appreciation. That's what we've been saying out here, especially like people still are buying in California, but it's still that mentality of like the long game. They might not have the cash flow right away, but they know those property values are going to keep going up. So you might as well just get in, refinance later, and start building that equity.
Mhm.
Yep. And then let's, Alex, why don't you tell us about this the active investments that you're working on right now? So Arkansas and Cincinnati.
Yep.
Yep.
Cincinnati, Ohio, and Arkansas.
How do you choose and kind of assess these projects?
Yeah, so both of the market, we have boots on the ground. So my partner at Alstro Venture, Karen, she's in Cincinnati, and then my other partner, Josh, from Vidisen, he's in Arkansas. So they are the one that's going out there to assess the property. But first, we define the specific areas that we want to look at. Looking at job growth and population growth, both of those two key indicators. As long as there are a diverse mix of different business types and not just like one dominant field, like that's a good area for it. We have job growth across different diversity. And then with the population continue to go up, is also a good sign for us. So with those two, and then number 3 would be the how tenant landlord friendly for those states are, right? So one of the reasons I don't heavily invest in California is because of it's not very landlord friendly.
Yeah.
So in an event there is a tenant that doesn't want to go, it's just much harder for eviction, right? You could work with them, but I've heard stories of like 6 months to a year worth before you can get somebody else. So part of the reason I stay away from that for especially multifamily, and also for the cost of per unit, we're looking at between $90,000 to $100,000 unit, both in the Cincinnati market and in Fayetteville. So the growth is there, and also we're able to capture the appreciation more on the Arkansas side. And so we get a mix between cash flow and value add long-term gain for the market.
Wow.
Yeah.
And that is, so how long, when you're looking in those areas, could you do now have like somebody over there?
Yep.
But did that, like, were they already over there? Did that kind of grow as you already chose the property? Like, how does it, are you both kind of over here, like doing a lot of research before, I guess?
So my partner in Cincinnati, she lived there, and that's where she grew up. And then my partner in Arkansas, he actually moved from Boston to Arkansas strictly because the market has all the right signs, and he wants to be the partner to be boots on the ground. So he has some flexibility with his wife. Being able to relocate to that location. So he left his full-time job to be boots on the ground in that market. So he's definitely all in.
Yeah.
And we're fully supportive of his effort in there. So it's been quite exciting to network with the area over there. My partner in Cincinnati, she actually flew over to Arkansas so that they could all see what the experience is, physically see what the areas that we're trying to buy at, and also network with the brokers and such, because at the end of the day, real estate is about relationship.
Yeah.
Kind of like what we have here.
Yeah.
I have a question, Alex. When it comes to value add, I mean, I feel like it's so important. We're from California. We love it here.
Yeah.
We grew up here. I'm planning on raising kids here in California. I don't plan on moving anytime soon. When you do the multifamily out of state, like, how important has it been? How beneficial has it been for someone to be boots on the ground in the business?
I personally think it's super important. Like I've been in a deal where when the boots are not on the ground, at the time of like sharing, with the deal, it's everything. All the numbers work. It sounded great, right? But like in the last year and a half, where the rates has gone up, it just, when trouble hits, it's much harder for them to navigate. So I wouldn't invest in any deal
Right.
that doesn't have boots on the ground
smart.
going forward, right? Because
Especially
part of it is
value add.
experience, especially value. You have it's kind of like a property manager. If you're not there, they could say whatever they need to say, and then all you can do is kind of blind trust. So being able to go, oh, I'm gonna go and verify it, right? Trust but verify is so important in real estate, especially on a large 30-unit property where it adds up quickly, even at small fixes.
Yeah.
Yeah, because that's where I know a lot of investors like, oh, you don't need to be there, but I was trying to find that like sweet spot for the audience. Like, how many units do you think that it would be like, okay, you need to have somebody there, like somebody boots on the floor, like you said, like 10 units, 20 units. These are about 30.
Yeah.
So where is that like sweet spot for you? Like somebody needs to be there.
I think it really depends on your risk tolerance,
Yeah.
right? Like if you have a good solid relationship with a property manager that you've built and trust, you may not need to have boots on the ground, right? That your partner is the property manager, but like as you know, for multifamily, is you're buying a business, so you want to have somebody that's running it. So I think a 10 unit plus
Like
is that borderline where you should probably have a partner that's actively engaged in it, right? Because now you're going into millions of dollars versus it could be under $1 million for when you have a single family property.
And so that would be your active properties. You
Yep.
both do basically passive.
Right.
So that's where you put some money in, and then after a certain amount of time, you are now just basically collecting checks, right? Like you don't have to do anything on those deals.
Right.
How do you choose? And you have these in multiple states, I think both of you.
Yeah.
So maybe extend on that, which states that you chose and how you chose these deals. Kind of just handing over the, because you're kind of giving up the control.
Right.
You're just going to put your money in. So where does that comfortability come from when you're looking at a deal?
For me, I like understanding will it beat my investing strategy in the stock market? You know what I mean? Because it's like, for me, I'm investing in a partnership,
Yep.
or they're gonna have majority control. They're gonna have the decision making capability. What's their track record like? What type of credibility do they have? What type of deals have they ran before? What's their exit strategy? Understanding that versus, okay, if I took that same X amount of cash and put it into an index fund or an ETF, or put it into a stock I really like right now, what's going to have a better outcome for me in the long term, right? I always weigh those two, and I want to make sure I want boots on the ground to some extent too, right? People in that state understand the market, understand the neighborhoods really well. For example, you had Bailey on the podcast. He's in Cleveland, and he was born and raised in Cleveland, has brothers in Cleveland, family has a construction company out there. He's the guy, he's my area of expertise. I'm kind of going in blind, but I trust his expertise in the market and the area, and he has a track record.
And he has a team now.
Yep, has a team, track record. So it's like, all these different components, right? I'm investing in a company. It's like the same thing. I treat it the same way I'd underwrite a stock if I wanted to buy a stock on the stock market.
That's awesome. Yeah, that makes sense, because I'm like, in that instance, I like how you say that. Like, basically, you're giving up your rights, like, for control or decision making. So when you do those, is there a certain amount, or like, is there a certain amount that you'll put on those deals? Does that kind of vary? Do you kind of keep that a little more minimal, and then maybe raise capital to your own deals, kind of put the most into those, or how do you kind of do that?
That's a great question. Yeah. Alex, you want to
Sure.
answer that one?
Yeah. So the passive deals I'm in are multifamily. So one of them is 150 units, one of them is 120 units, and then I have a third one that is I believe it's a new build that's coming out to 200 units. Different markets. Two of them is in Phoenix, Arizona, and one of them is in Huntsville, Alabama. So I started with those and this is where experience and wisdom come into place, right? There is, of the three, I think there are one that I probably wouldn't invest with them again, right? Not that they're not executing according to plan, but it's how they are treating me as an investor, right?
Oh, wow.
So just communication perspective, I expected more. So now looking back, knowing what I know, today I know exactly who I want to invest with, right? Because I built those relationships and I've seen how other have executed, and they're in line with how I would operate, right? So to me, having patience and finding those right people that you want to partner with, and you have to treat these what you're investing in into a partner, right? Even though you're a limited partner, it is still a partner. So you want to make sure not just the deal is gonna return money, but you're gonna be in a relationship with somebody for 5 years at a minimum. You want to find somebody that you like and enjoy, and you can pick up the phone and say, "Hey, how's the property going? I see this report. I don't feel comfortable,
some of them?
on one of them particularly." So it just doesn't make me feel good, right? So I think it's still going to be on track to return. This one was 1.5 times my money. But again, once I get it back, I'm going to reinvest somebody. And this is where long-term relationship is so important in real estate, right? You want to make sure like you treat every investor as if they are your partner. And I think that goes a long way, and why we started Alstro is like we know now who we don't want to be.
Yeah.
And we want to make sure, when we find our deal, we treat our investor like our family, right? Because you have a fiduciary duties for, your response for their money. But to go back to the requirement questions, it depends on every GP. I think it starts with on the low end 25. Most of the one I've been invested in, it starts at $50,000, because the key is there's always risk to real estate. And if somebody is unable to put in $25,000 or $50,000, it starts to be like, maybe this is not the right type of investment for you, right? So it has to be a comfortable $50,000 in order for you to get into a syndication. Again, it depends on risk tolerance, right? I started getting into multifamily because I have a full-time job, and being able to just start investing in real estate and let a experienced operator run it was perfect for me. Yeah. But again, there's just a lot of learning curve to understand what the market. And I think I got a little excited at the beginning and started investing probably faster than I should. But again, risk tolerance, right? Some will analyze and analysis paralysis, and they never execute, right? I kind of went the opposite way where I execute a little faster. But again, I learned so much through the process. Yeah.
Once you just if you start running in, you're definitely gonna pick up some, okay, don't do that.
Absolutely.
Now you know. I do have a question on the one that you're in. I think it was Arizona. The one that you're not too comfortable with.
That was the Huntsville one.
Okay.
Yeah.
For them, were they a referral for you? Or did you kind of find them on your own?
I found this one on my own. Okay. So it was through a podcast. Okay. I listened to it. He had a podcast, like it was educational. And then I, kind of researched the background on like how much what they've executed. So, all of those track record things.
But it was more of their personal
absolutely
execution.
Yep. And they may fit well with others, right? So the style is to me is an important factor, especially now, again, 2 years in. I want to be treated a certain way, but sometimes there's different groups that's okay with that, with how it's being handled.
Some people like transactional. I've definitely worked with some investors where it's they're so experienced, and it's like I tell them, they don't want to be walked through they don't need to be walked through the process. They don't want to they don't want to hear about my life. Right. Like they don't want me just like where are we at? What are the numbers? But there's also a lot of my clients, they want that conversation, right? And they want that more closeness and 100%. So I feel like, everybody is going to be different on that aspect, but at least you did your research, and now it's just more like a
I wouldn't they're not like that people, right? It just doesn't match your style.
They don't have that family vibe. I'm more of a family vibe type person, right? So I get that. And for yours, did you already kind of go over you're doing your passive deals as well, right?
Oh, right. Yeah. I don't know too much. It's been a while since I've been invested in the passive side of things. I've kind of taken a step back, but we were invested in Arizona for a little while. Okay. Went well. We had a good exit, and we I haven't looked into that because and that's to your original question on how are you selecting where to deploy your capital.
Yep.
When I have I want to do more personal projects under my name that are not associated with a limited partnership, then I want to preserve my cash. I don't want to invest too much in a limited partnership.
Yeah.
So right now I'm taking a step out of the limited space. I want to really take time,
do your own.
understand, do my own deals, build the credibility on my front, and then execute my own GPs.
So when you say do your own deals, more like maybe go out of state. So you kind of mentioned like Ohio, maybe get holds.
Yep.
Okay.
Yep.
And then, so that would be, we're going to get to turnkey in just a minute,
Sure.
but, so when you're doing, sorry, you guys both have holds right now though.
Yeah,
In California. Yeah.
Okay, so let's talk about those holds. How long ago did you get these properties? So have the new laws changed a lot since you purchased? Because now you said you're not purchasing as much out here. You are focusing in other states.
Yep.
Like when did you purchase in California?
Go ahead.
Definitely, it's, California has seen such a surge in property prices in the
Yep.
past 5 years even. This was all, the most recent property was probably in 2020.
Okay,
Yeah.
nice. And you got your property that year.
Yeah.
So
got
were
that
you kind
year.
of nervous about that? Like, was
Yeah.
it one of your first
Yeah.
deals?
Yeah, it was,
Wow.
very nervous.
Okay. Were you a little worried? Like, did you almost not do it because of everything that was going on?
Yeah, it was but you know what? It's the price is good. You just got to move forward with
You
it.
just
The
gotta
cash
go.
flow, the numbers look
And
well.
how
you
happy
have
are
to-
you now that you
Great.
pulled that
I mean,
trigger
you
in
gotta be happy,
2020? I'm sure
Yeah.
the appreciation has
Yeah,
gone up
exactly.
a
And
lot.
the way you look at it is California, every market has like an exponential curve of growth,
Yep.
property growth, property appreciation.
Yep.
California is at a really high level in terms of their appreciation, right?
Yep.
So it's like my plan now is how do I take what we've done in California and replicate that in another state where we have a bigger curve of appreciation that we
Yep.
can start hitting. So we're very grateful, California, for us. The earlier you get in, the better, because the appreciation here is unbeatable. In my opinion, everyone's going to want to live here eventually.
How
But
many units was that one?
yeah, it's a single family
A single
property.
family,
Yeah,
okay.
yeah.
And then you are both also going to be adding ADUs on these California properties.
Yeah.
And already started that process. Is the ADU on this California property?
Not the one recently,
Okay.
but we have a couple in San Bernardino area.
Okay.
Big lots. So
Nice.
with good backyards, we haven't developed anything on these backyards yet, but there's a lot of good ADU potential. So
Okay, great.
2-bedroom, 1-bath, adding square footage, forced appreciation, value add. In California, in order to buy a property of like that, it would cost you, $800 to $1 million, right?
Yeah.
Depending on the area you're in. Instead, why don't we just do a ground up, get the permits in place, add the square footage, and then increase our cash flow on that property.
Nice.
Um,
So
You gotta
will
take
you be
advantage of the space.
adding multiple like ADUs?
Probably just one per.
one.
Yeah, you don't want to make it
Too
too
much.
much, right? Because you still want to. You don't want to create some type of.
And people are
group
going to be living there.
environment.
They're like single
Yeah.
families. You want them to have their space. So you're going to fully develop that, but not quite there yet.
Yeah, we're still in the beginning process of it, right? We still have
San
tenants
Bernardino,
there.
yeah.
Don't want to disturb them quite yet, but when the
Get that
leases are
plan,
up, it's going to
yeah.
be something that we want to set all the permits in place, the blueprints in place in order to start planning
That's
those things
awesome.
out. Yeah, so it's exciting. I'd say if you in California, if you're a homeowner, really highly
If you
recommend.
have that
Right?
space,
You have the space. You have
Yeah.
a big lot.
like
Adding square
us in
footage is huge.
Huntington or Newport, it's harder. Because when I thought of that, I'm like, nobody really has backyards.
Right.
But if you go more inland, that's going to be huge. And then you can also sell them, I believe, as
Yep.
like condos. So that will actually I feel like that might be the in for a lot of people that haven't quite invested yet. They may be able to kind of at least make some money that way.
Yeah.
Or rent them out, build one, and might be able to help them if they just kind of want to get their feet wet, like if they have the space. And then you are currently also building
Yep.
ADUs.
Yeah, so
And
this
you're
is
a
more
little
of
further in the
family
process.
family portfolio, right?
Okay.
So I have my active stuff in
Yep.
over our estates. This is more family portfolio. We have a 2 single family home, but we've had these for over 10 years.
Okay.
Yeah, so it's just recently like where my interest in real estate, where I started to have a conversation with my dad, like we should start to expand what we have, right? So like if we don't want to sell because it's doing well, let's expand it so to create more cash flow. So that's what we started doing now is we got the drawings done, we got the blueprints, and then we submitted to the city. So it's going through that process. So we're hoping to be able to start development by and ours is a garage conversion. So it's
Oh,
a
wow.
2-car garage conversion, and it will put 2-bedroom in that ADU. So we're excited. We're hoping to start around July, August of this year. And this is my first ADU process, so I'm just
How
kind
has
of
it
following
been
through.
so far? Yeah. Has there been like any challenges or something that might have been a little harder in California to get? Like you haven't quite got to the permits.
Right.
But how about the rest of the process?
Yeah, I think we're, I'm extra cautious just because it's, again, I'm not familiar with all the laws and regulations in California. So I'm learning as I go, reaching out to my partners that have done ADUs, seeing how they're doing and what vendors they're using. So I'm going through my journey as well. But I would say, one of the more interesting parts is to decide, like, do we want to do ADU for both property, or do we want to just do one? And why do we want to do such things? So when you start to dig deeper into the city and then the rules and the laws of that applies to it, we start to decide, this is not where we want to be. So while we bought the property, it's doing well, but in terms of like adding an ADU, it's probably better to if at some point sell the property and then buy it into like a different city that we could build an ADU on top of it. But definitely the different rules and county makes a difference on how challenging it will be to get your permits.
Oh, absolutely.
Yeah. So that was a factor. I was thinking, well, if you have the space, you can build ADU, but that's not as simple as that.
And yours is in LA, right?
It's in Covina and West Covina.
Okay. But like LA County.
Yes, yeah.
LA
It's
County,
LA
right?
County.
Yeah. So I haven't, the laws are still changing constantly.
Every
so.
year.
I feel like California is slowly becoming more ADU friendly, though. I feel like there is a lot of
Because they're
more
trying to
legislation
get-
on this.
Yeah, they need housing.
They
They
need
need
do.
affordable housing.
They need,
Yep.
and then it gives people also, I think the idea too is to help people kind of get some more income
Yeah.
as
Right.
well.
Yeah.
Right.
People are struggling.
Because the mortgage
you
rates
know?
mortgage interest
Yeah.
rates are so
And
high.
at
Yeah.
least if they already have their property, maybe they can't move at the time, or they're holding back because they might have a really low rate or what have you. So maybe they aren't going to take out a HELOC or, what have you. So maybe if they can put one of those on their property, they might be able to get some cash flow, which is going to be great. That's what I thought of too for California. Definitely help a lot of families out, especially in the tough time.
Right.
For your ADUs or even for your future one, the financing is still a little more tricky to get right now. Not as many lenders. I mean, I don't even, when it comes to the financing, ultimately we're guiding people to get HELOCs or cash outs and do everything cash.
Yep.
Is that did you find someone to finance it? Or is that kind of your method as well?
No, so we because
Or just raise
internally,
the money,
we're just paying cash for it.
Okay.
Yeah.
So more just like raising for
Right. So
if
our
that
goal
makes
would be
sense.
like when rates start to go down, we'll refinance some of
Yes.
get some of the equity back. But right now we're just putting our own equity in.
I know. I forget. I'm talking to investors. Like that makes more sense. You guys are going to raise the money. I'm used to talking to my buyer. Just like my first time home buyers.
And I'm going to say HELOC is not a bad idea.
Yeah.
I don't think
Right.
that's a bad strategy at all, because you need to really look at the numbers, right? If I
Yep.
build this property, it's going to cost me X. What can I bring in a month?
Yep.
1% a month, right, of what it cost me to build this could be worth your time.
Yeah,
So,
the HELOCs,
yeah.
a lot of people still, they're going more HELOC. As long as you can qualify, you still got to have some equity in your home because
Yeah.
Right.
they're still looking to be, when everything's said and done, yours was LA County, you said about 100,000. I mean, after the permits, get everything in, you're still probably looking closer to like 200,000, maybe 150, 200. So ultimately for a single household, like if they have a lot of equity, that's great. Some, you know, for the HELOC is usually what everyone has been doing right now, which is for investors, it's different because that's like your first nature, you know, like, hey, I'm going to get this, I'm going to call your people and, you know, get all the money together. And
private money is probably
Yes.
a strategy I hear a lot,
Yeah.
right? Like, hey, you know, we're gonna build this, and then after
Yeah.
we finish building, refinance it, and you get
Yeah.
know, your money back. So, you know, and it's cheaper than the banks.
Yeah.
So if you have like the right partners, where like, all right, I like you, I know you, I trust you. Here's some money for you to
and
invest
that,
in, and
yeah,
that's great, right?
No, it makes sense. I just didn't, because usually when I'm like pitching it, it's just when it's, say, like if they haven't had an investment before, that's usually, but
Right.
absolutely, if it's like investors, go get private money.
Yeah.
That would be the ticket.
It's the power of networking.
Yes. No, and more. I mean, the people that we like are private investors, like it definitely gives, you know, when I'm networking and helping others, like it's definitely one of the best avenues,
Right.
you know. Definitely get you in the place that you want to be without just, you know, with the conventional loans and everything, there's going to be a lot of more steps, a lot of more process. So
Right.
definitely a little more straightforward on those and more just numbers.
Right.
So I do love being a part of those deals as well. And for Neil, so your next project or what you're currently working on is going to be, you had mentioned before, Ohio and I think Florida.
Yep.
So you're looking to look at more holds that already have cash flow.
Yeah.
So we did say that I would mention it later, the turnkey properties. So what why did these appeal to you, and how do you evaluate these opportunities?
Yeah, great question. I'll start with Florida.
Okay.
Jacksonville, Florida is one of the hottest like growing
Markets
right now in the country. I mean, it's got a huge population of people going into it. People are investing a lot of money in Florida. Some of the top companies are moving those areas. I like the numbers in those areas a lot as both a long-term investment, mid-term rental, short-term rental are potential avenues there. Turnkey specifically is because I really, you know, the core value and understanding for me for real estate is I want a passive investment, right? I don't want to go and worry about having to fix it up, having unexpected issues and delays. I would rather just have a turnkey property, treat it as an investment, and receive the cash flow on a month-to-month basis.
100%.
And that should be the goal for everyone, right? It's like my goal is to travel more and eventually have my real estate income replace my W-2 income to some degree. And the way I do that is by accumulating more cash flow on a month-to-month basis. And the way I do that is by finding opportunities in these turnkey and in these markets with turnkey properties.
And what would the price, like when you're searching for the average home?
Yeah.
Like that Florida, Jacksonville, I do hear that market is hot. Is it around like 150, 200?
Yeah, roughly around, depending on the area. A lot
and
of
then
different
what would the
neighborhoods.
rents kind of be, just like off the top of your head?
Yeah, I mean, so you can get a property in the scope of like 250 to 400 in like nicer areas near the coast and the beach area. The rents could be anywhere from $1,250, $1,500, $2,000, depending on the area you're in.
And that's already just like cash flowing for you.
Good market.
I do think that those turnkeys, like once I started diving into it more, I think it's definitely a great ticket, like especially for first time investors. To get out there. Do you have any turnkeys right now? Is that on the radar for you? I feel like you like a lot of doors. He's like,
Yeah, like Neil said, like you just have to like stick with like the one thing and get
Yeah.
really. So
Yeah.
my
Yeah.
niche is definitely multifamily.
absolutely.
Yeah, and you know you do get distracted with the shiny object. You know, somebody would go, "Oh, I'm doing this, and I make this much money in Airbnb," and then you start to like, and then you just gotta like snap out of it.
Airbnb. Yeah, I'm
Yeah.
surprised. You guys do have a lot going on, but yeah, no Airbnbs.
No,
Is
not yet.
there?
Yeah,
okay,
right,
not yet.
not yet. Yeah,
He's
but it's
gonna go all over the
that's
board.
the interesting one because like Airbnb is a path that would help accelerate like the separating from W-2 optional because it Airbnb gives me some ability and with my spouse where she has a 1099, it could help offset my W-2 taxable income.
Yeah.
So that's a strategy I may look in, not because I love Airbnb, but more because it will help me save some taxes.
Yeah, tax
Yeah.
benefits are pretty good.
Right, because
With the
multifamily is
Airbnb.
focused on passive income, so all of the losses are passive losses. So I can't really leverage that. Versus Airbnb, I'll have some opportunities there.
Okay.
So that's part of the reason I've been starting to dabble a little bit, but probably a little outweighs out until I get
Yeah.
into
Yeah.
a first Airbnb.
Where would you do your first Airbnb? Yeah.
Let me tackle the long-term rental first. I feel like
I feel like you
Yeah.
have one in the top of
It's
your
an
head. I hear
idea.
they're
It's an
good
idea
in
for sure.
Florida.
I've heard.
See,
Yeah.
he's gonna go out there, get a couple
No, I
of
mean, you'd be
turnkeys.
surprised, yeah.
Right.
and
Well, I like to
then-
say that
and
I
then
want
he'll
to
have-
in a place where I would want to visit, right?
Exactly. Right? I mean, living in New York or Ohio,
Right.
and you want to go on a vacation with your family, you might end up in Florida. You know,
Right.
so-
Or Miami. So that's what's one like
Yeah.
I go. That's a great city.
I know,
like
that's where I
gives
wanna
me an
go.
opportunity to go out there for hey, it's a business trip.
It's a business trip,
Yeah, they have
sure.
some good,
Yeah.
like Miami, Tampa Bay.
Right.
Yeah.
I hear
Yeah.
good things about Tampa. Or Daytona, like they have a lot of beaches, right?
Yeah. And on the
that's my
coastal,
jam.
there's
Yeah.
definitely a lot of opportunities there. Yeah.
I hear that one is really good for like the Airbnb, or I just had an investor turn it into like a pad split.
Oh, Pat
Oh,
Split, I've heard a lot
Yes,
about, right? Yeah.
he said that because it wasn't really doing very good. I think it was like a long-term hold, and they
Yeah.
ended up like changing it pretty quickly. So they changed it like 4 bedrooms to 10 bedrooms.
Yeah.
So pretty crazy. So I just want to say all of the things you guys are doing right now, all of these projects, like they have passive, active, turnkeys, EDUs being built, and all of this with 9 to 5 jobs. So absolutely incredible. So just for our audience, basically if both of you can, give some advice, like what are your top, like what are your top 3 like time management? Like how have you officially been able to build these portfolios and hold a full-time, that 9 to 5? And then also maybe give some advice to if someone's looking to start their first investment journey, and where's the secret sauce? What's the ticket?
Go ahead.
I'll take a first stab. So that was a lot.
Yeah.
But I would say,
Whichever, just
number
whatever.
one is consistency.
Yeah.
Right. So if you have consistency in what you do, don't rely on motivation. Right. Motivation comes and go. You're just not going to get to where you need. But if you have consistency, even if it's just 15 minutes a day, right? Start with building something that you do every day, and once you have consistency with exercise, wellness, education, right? So real estate is gonna take some hustle. You're gonna need to educate. It's not something you can blindly go into. So any investment without education is gambling. So my number one advice is establish a consistent schedule. Block out time that this is the time for you to listen to a podcast, read a book, market research. Once you start to establish those things, yes, it will carve into your time, but you just have to look at it. You're investing in yourself. Once you start to figure out, hey, this is the niche that I like, and you're going to go to different conferences, and everybody's going to tell you there's a way to make money in real estate, and it's all true. You have to define the one that fits you and your style and your risk tolerance, and find the path there. Once you find the path, then you start to find your mentor, right? If you want to speed up and go faster, you have to get a mentor, somebody that's been there, so they could kind of hold your hand, walk through it. Yeah. So if you do it yourself, you could absolutely do that. It will take a little longer and you'll make a little more mistake. So you have to find that balance of how fast do you want to go, how much time do you have, and then just keep on going. Because those who are consistent is that little picture where the goal is right next to the wall. But if you give up, then the person that stays consistent is the one that's gonna win. And then the other component is define your why. Like, why are you doing this? What is your goal? You start to define your why, and I started with like just financial freedom for myself and my family. As I got into it, my why shifted to like, wow, I really like this and I want to share this with like friends, family, colleagues. So which is why we started Alstro Ventures, because as a banker, like we just talk about work, like you talk what happened to the last meeting, how did it go? Oh, it's all of the stuff that you're stuck in that W2 employee mindset. So you start to educate, and I'm excited. I go to podcasts, I goes on posting on social media, is so that I could inspire my colleagues to think a little bit outside the box. And if I could help one person to start this journey to financial freedom, I've succeeded, right? Because now that I got my journey started, I want to help people. And being on a meetup with Neil is another path, right? We're not doing it because we're selling anything. We're doing it because we're passionate about like networking and helping others succeed, and being able to share knowledge and educate others and bring like-minded people so that they can mentor others, or even help me learn some more stuff. We're always at a learning mindset, so it's been quite exciting between those things. And then the last one is wellness, which is why I got into Human Wellness Center. You have to have health before you could do anything else. So take some time, eat right, exercise right, and be around positive energy and have a good mindset. I think all of those habits would come together, and you'll succeed. But it takes time. It doesn't happen overnight, but it starts with consistency with one thing.
Yeah. That's the thing. With real estate, it's not like buying a crypto or like buying an NFT and just like praying that it goes up. It's consistently KPIs on a week to week basis, right? Like how many calls am I making? How many offers did I send this year on properties? Like just measuring your success, finding different ways to measure how you are treating your time in real estate is important, right? I look at it like work too, right? At work I have KPIs. Real estate also have to have KPIs. Key indicators to telling me if I'm succeeding right now or not. And you just got to treat it as a business, and you had to build your personal brand. And real estate is a follow people game, right? To some degree too, right? Think about like Grant Cardone. Think about some of the biggest, most successful people in real estate. They built a brand for themselves.
And they're
people
giving
follow
back.
them. And they give back knowledge. Yeah, mentorship, right? If it's something you really want to get into, then there's people that have done it. And real estate's one of the oldest industries in the world. It's been done, it's repeatable, it's consistent, and it's known to be profitable. So,
wow.
Yeah.
That is amazing. Thank you. And I agree with both consistency and just the health, everything. I think I live my life like that, and I feel like you need all of them to really kind of build that ladder of success if you want that full balance. But absolutely. So you guys heard it best. These are the two guys out here in Newport absolutely crushing it, and also giving back which is amazing. Their meetup was one of my first meetups that I started going to. I believe it was one of my first. And I still go to them, and I learn and meet more great people. Like I've connected with so many people, from so many investors, actually a lot that have already been on my podcast, I have relationships with. So definitely thank you both. Thank you for joining me today, but also, giving back to us here in Newport and sharing your knowledge and, helping us all get up that ladder in real estate and grow.
Yeah, appreciate it.
So,
Thank you for having us.
Around
And
us.
you've been a great supporter of Meetup, and like it's exciting to kind of grow together.
Yep. No, it's been a good year. And even though, yes, the rates have not moved, and, it's all about that consistently, you know, we're still out there every month at the meetup. You know, we're still showing up every day. And ultimately, I still, even though we're a couple of months in and we haven't had that rate drop, it is still going to be a great year. And I know that this year is going to be a great year for growth all around and for real estate on so many levels. So thank you guys again. Share, subscribe. If you guys are interested in any of the investments that they are doing, please comment below. I will have all of their information, including the meetup, down below. So thank you for joining us.
Thank you.
Thank you.